Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a strong start to the year, the Australian dollar has reversed from 71 cents and found somewhat a bearish correction coming into play here as it now looks towards the bottom side of this support area, seen around 69 figure 20. I feel the market may extend if this pattern continues towards 68.65 and reassess from there. Market is still a little bit jittery as the recent Australian Producer Price Index held steady at 3.5% year on year in the Q4, signaling stable upstream inflation and limiting near-term upside. That said, though, the currency remains somewhat underlying support after a hotter consumer inflation lifted expectations of a 25 base point rate hike from the RBA as all eyes turn to Tuesday's rate decision. Meanwhile, in the US, the dollar found support after renewed confidence in the Federal Reserve's leadership and optimism around avoiding a US government shutdown. Meanwhile, President Trump's nomination of Kevin Walsh as the next Fed chair, a move markets interpreted as reinforcing a disciplined and cautious approach to possible easing. Still, looking ahead this week, all eyes will be on the key factor besides the RBA, that is the Friday's non-farm payrolls report, which could be the risk driver for the week. Nevertheless, let's see how the market plays out this bearishness and see if we can get a bounce. Turning to the euro, the market has also tumbled heavily from the 120, 121 area and now looking back towards small area of 117.75.85. And let's see if market can find support there and get the bullish correction back into play. The dollar yen also finding a little bit of uptake after posting close to a Marubozu candle on Friday. The rejection, though, from the 155.30.55 area could see a little bit of bearish play come in as we're still holding to the risk of intervention. And that is, if we do, we could still see a move down to the 151 area, which I'm calling. And let's see if it can reach it. Upside risk still remains from a bull trap. Looking at sterling, well, a little bit of a negativity coming into play here. That could follow on to the start of the week, but I'm not going to get too negative because I feel the broader case is still somewhat bullish. Support seen around 136.35 and the top side around 137.5. I'm going to stay out of gold at the moment. This whipsaw price action after seeing a $750 drop on Friday and still seeing good 300-point movement today. Keep an eye on this trend though. As we can see from the broad call, holds around 4,550.60. Let's see if the demand bargain hunters come back into play. It is a little bit cautious though that a break here, well, we've got to go back to the drawing board and reassess. And talking about reassess, we can see a little bit of a free fall here when it comes to oil as the market now looks away from that top side call, which was seen around 65, 66, and now looking back to the bottom side call, which is somewhere that is of 62 to around 61.5. Reassess from there, just in case we get a bounce. There is a short trend here that could find a bit of bullishness or demand come back into play. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new week.